time for new public market update. So we have some quite interesting price action, so let me cover that. But first, quick update for the Discord. We have a lot of people already in the server, but I'm now also at the option for people to use the Bitunix link to join the server, so the premium site. So all you have to do is to either generate 50k volume a month or have a deposit in the last 30 days of $500, and then you can register your here at the Bitunix bot. Here it's explained as well, where you press here, put in your UID, and the bot will automatically check that, and then you get added to the Discord server. So they get a month access, and the bot automatically checks if you have access or not. And then you get all my updates, so daily statistical updates, TradFi updates, crypto updates, Throughput today, like a lot of updates, daily live streams, and not only from me, but also insights from other respected traders. And you get like education library. Here I'm based on weekly adding videos based on the things I use, so supply and demand, liquidity, ranges, and over time more will added statistical confluences, literally everything, so you know my system. So yeah, definitely check that out. Then let's go into the price action, because we have super interesting price action. We have been in this range since like the selling climax, which happened around the 6th of Feb, and then we have this as the start of the range high. We deviated that 2 weeks ago, and from there my main expectation was to get like that higher low and then form either the model 2, but main expectation was to go for a model 1 or a bearish BO3 idea, in which we would take out this high into the supply levels we had located above. So that has played out pretty nicely, and even took during the weekend a long into those new weekly highs, which I can quickly explain. Last Friday we had this move, taking out literally the extreme liquidity of the range and just front running that ultimate high. So this was the point. A lot of people thought, is this the model 2, or yeah, will be the higher low for the higher high? I was in the camp of a higher low for a higher high, basically because we had this structure from the low up. So basically high, higher low, higher high. So this could just be the higher low for the higher high. And that was my main expectation as well. So I said during the week, look at how price comes back, because basically you can see this as a range that broke to the upside. So then you can see it like this. You have a range right here, was broken to the upside because you broke clearly out of your deviation threshold. So this is the breakout, and this could be the retest of your range to mitigate it before the continuation higher. So I mentioned in the group that I was watching the range here, and then what I'd like to do is to put your volume profile from the start of your range till your breakout level, and then look for the retest of your POC. So that was at this point. Let's make it quickly red. And then you see that price perfectly retested that. So I took a long when first I said, okay, I'm watching this local structure low, lower high, lower low, lower high, lower low to break to bullish, which eventually happened here. So this could also have been your, like, based on market structure valid entry. With your entry right here, stop could then be below the low, and then again would run that into new highs. However, it was Saturday and I was having a beer with friends, and I saw this price action going down, and then with the like rounded bottom formation, which shows that buyers are stepping in, because a rounded bottom shows absorption, and price tapped into that POC. So my entry was basically around here, I think. And then I gave my stop room at the value area low, and then I ran it into those highs. just because I knew this is an inflection point. Either you form the higher low here for the higher high, or if you break down, then this idea is invalid, and then I'm super interested in any shorts on a pullback. But I was still expecting higher, so this was my trade eventually. Was TP was at 74.5-ish, and then I closed it around here when I woke up on Monday morning. So nice trade. And the moment we got this break of structure, I trailed my stop to that last low. So normally I use market structure to determine my entry points with invalidations, but sometimes when price is at an inflection point where it's either you form the higher low or you break down, then I give the stop some more room and then tighten it when I get confirmations. So that was nice. And then this week we had that push up into new highs. During the stream yesterday, I mentioned that we had this local range, but I was feeling that we would see further upside. So I was not really interested in this local distribution. I was more interested in a tap of this range low into demand to look for new accumulations for longs higher. However, we had like a higher low and then started to push up. So no long from this level, but it's all fine. I'm not trapped into short, so already happy with it. And right now we are consolidating above here. To me, it is bullish into proof and otherwise. Also, if you look at structure, you can basically say you have high, higher low, higher high, higher low. This took out the high. Well, no, it doesn't matter. It's basically the same structure level, higher high. So this can just be a higher low for a higher high. And it could also grab these lows into demand and then form the higher high. So interproof and otherwise, I'm still more leaning towards higher locally than I'm overly looking for shorts. However, this is a zone where you have to be careful because we have a lot of sell side liquidity below us. So the moment we start breaking structure, that is when, like if we break below here, then any retrace here is super interested to short to take at least out all this liquidity and potentially the range lows all the way. But for now, I think this needs more time. So basically here to create a better time duration. If this is turning out into a distribution. For that, I want to see like this high be taken out, like 2 tap at least, or maybe even a 3 tap, show kinds of distribution and then come back. Then I am super interested in shorts. For now, if I look at the range and the duration of the current manipulation phase, which is this zone right here, like current price actually is this. For me, this is too short to be a, it can happen of course, but I don't expect this to happen. Normally it's a bit in relationship to the range. So based on this, I expect at least a bit longer manipulation if we are intended to go for the bearish PO3. Then break structure, then full reversal, at least to the mid-range, and potentially even taking out these lows or even the local low and look for accumulations from there. For now, I'm simply cautiously keeping the bearish mind option in mind, but for now, better to respect the trend and just follow the trend until it does not work anymore. So locally, we have basically here local trend going down, lower high, lower low, lower high, lower low. So this local downtrend, so not really interested till we break structure back to bullish right there. We tapped into demand, but yeah, we have a weak London low. So I can show you here. That's where statistics come into play. So we have a Asia high at our 1 or 2, strong high. Then we have the low at our 10. That's a super weak low. So as I said in the group as well, I expect at least if we're gonna bounce to during a stronger hour, which is basically from now into New York and then the first 2 hours of New York open. Then make a new low. And then if we then break structure, then I'm interested in a move back to here and then potentially new highs. Beside that, yeah, I'm waiting for this low to be taken, and main POI is to take maybe even this liquidity into this demand and look for longs from there. However, a lot of different options. And tomorrow we have CPI, which is a big event. And I wouldn't be surprised if we range from here, maybe make a new low, then locally tap into here, for example, get to mid-range, so they have range low, range high, mid-range, and that we just range between these levels into FOMC, basically to create liquidity on both sides of the market, get those stops, let people short put their stop above the highs and let people long put their longs below the lows. And then during the event, take the lows, take the highs, and then go for the real direction. So I'm not super excited to jump into fresh trades right here, or it needs to be super clean. But for now, I think we can chop around these levels. So let's quickly look at the stats for today. We have a pretty strong high. 27% of the days took out the daily high, and 18% of the days took out the daily high. So high is likely to hold. And 95% of the days form a new P2. This is why that current low is a low probability low to hold. So I expect that to taken. And then you can look for potential reversals. And here 61% of the days move further. So yeah, based on that, I think we will chop around these levels till FOMC, but we have to see. And weekly, so first of all, what is the weekly low and weekly high? We have the weekly low right here, and the weekly high is the high at Tuesday. So weekly low, weekly high. Then we can see 35% of the weeks took out the weekly low based on timing, and 25% of the weeks took out the weekly low based on distance. So the low looks better compared to the high for now. And then we also have like 95% of the weeks form a new P2 after Tuesday. So it's very unlikely that this is the low and this is the high for the rest of the week. So at least one of them will be taken out, likely. And for now, the low is a better pivot. So that shows that there's a pretty high chance to take out the high. And also based on distance statistics, 93% make a bigger move. So I said very likely to at least see or the low or the high be taken out. For now, I'm leaning towards price taking out the high. But yeah, don't forcing anything here because we are at a pretty important point, as I said, and more looking for that clear signals, which is either a loss of your uptrend, then a move down, or for the distribution by taking the highs, maybe tap into that more refined supply, break structure, and then look for that reversal. And then this is basically your bearish PO3, which has been the main idea for quite a while right now. So yeah, those are the local levels. Beside that, I said locally not super interesting price action. And quickly looking here, yeah, also we have some demand zones below. So if we go back to the downside, these are levels you can fall back on and retest your daily POCs. They often act as magnets, so there's a reason for price to come there. But even if you do that, it can be just a higher low for a higher high. If you get above the daily POC, then there's not much to hold price back from going to new weekly highs. So for now, more or less neutral to slightly bullish, while keeping in mind the high time frame potential bearish scenario. Last thing to check, we have USDT potentially with a 3 drive, but bit too vertical to the downside to me. We are also like clean bearish structure, underproven otherwise, so this could just be a lower high for a lower low. where price then eventually could retest this range demand where we broke out from. So something to keep in mind. And in my opinion, for a good reversal to play out that potential 3 drive, what you want to see then is clean accumulation here. So let's say this is the low, this is your range high, then go back to the low, take out that low, form a local range like tap 1, tap 2, tap 3. Then you have enough well to potentially push back into your range. Right now, this looks more like it potentially even here is going for a high and then comes back. So for now, this looks pretty heavy until proven otherwise. Bit similar to to Bitcoin. So for now, that is the analysis. Tomorrow, big news event with the FOMC. So ready for that, and we'll update everything in Discord as always. So see you there, and don't forget to leave a like.